Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all back. It is time to get started with our morning analysis. Let me get rid of that really quick. Let's go ahead and get this up and running. All right, so we're going to start with the euro, and we were just talking about the pound Aussie, so I'm going to go back and go over to the euro dollar. So let's go over back over to yesterday's analysis and kind of update you on what happened with the euro yesterday. Okay, so let's backtrack, and I want to remove this really quick. Yesterday we were here, and we were looking at the possibility of this bearish wedge breakdown. Okay, now when we were looking at the bearish wedge breakdown, we're like, okay, we have consistent lows, lower highs. If we break down, we can target 105, maybe even a little bit lower, which would be 104.60, which have been basically retesting the lows. Now what we did with the euro dollar and cable and the dollar in general is we basically bounced after hitting new lows. Okay, so it created a false breakout. So if you're wondering, okay, well, we got a false breakout, why did we break the highs here? Because you guys know whenever you get a false breakout in one direction, it usually leads to a breakout the other direction. So that's what happened. Now, really quick before I go into the rest of this chart, I also want to note that when you're looking at the dollar index, remember yesterday we had our upward sloping channel in the dollar index. We were just rejecting right off of that, right off of that resistance, and just rolled right back into channel support, which is where we're currently at. All right, now going back to the euro dollar, so what does that mean? So that means like what we did here yesterday. Let me remove that, remove that. Now that we broke through the highs, the potential I'm trying to get my drawing straight here from yesterday. What that leads the potential to is a move back up towards this, more of a minor trend line, okay, which in my opinion seems logical. Getting a move up towards the 106, 106.40, 106.50 level. Now, remember what Paul said. I have to agree with what Paul said, that the chances of the euro dollar staging a massive rally ahead of the ECB meeting, I don't think is very good. The ECB meeting, everybody's expecting a dovish Mario Draghi. We're expecting more quantitative easing, probably in duration. We might find out some different asset classes that the ECB is are diversifying into. They might start, buying, library book loans. Who knows what the hell they're going to start buying? But they could really expand the scope of what they're doing with quantitative easing. Like we joke around, but trying to figure out what the hell the ECB is going to buy next is going to be interesting. But right now, the risk for the next couple of days is most rallies are probably going to be capped going into the ECB meeting. So the question is, how far can we go? And my 2 cents is we could probably rally back up towards the 106.50 or something like that. So what I would, here, let me get rid of this 200 period moving average just to give us a little bit cleaner look. What I would be thinking here is you have to start drawing some fibs, maybe from these spike highs. All right, like for example, from that spike high to the low from yesterday, we have a 618 that comes in at 106.40. Okay, you take this spike high, go down to the low. Here, I'm going to draw it down here. Okay, we have a 38% that comes in at 106.40. Okay, let's go over to the bigger spike way up here from early November to the low. Okay, so let me remove this blue line. I'm just trying to make it a little less complicated looking. All right, so we have a fib confluence right here at the 38% and the 618. Okay, now if you go a little bit higher, Okay, you go higher to 106.60, you got a 786 retracement. Okay, you also have a 38% retracement, and you also have a 50% retracement. That all comes in at 106.70. So my 2 cents is these are going to be here. Let's remove that for a second. This is where the euro is going to be capped, somewhere through here. Let me grab this blue line. Okay, so now what it seems like to me is we're going to be capped somewhere between this 106.40 and 106.60 level. Okay, it does make sense that we could actually go to 106.60, and the reason why I say that is because you got a horizontal resistance here. I can see it's just breaking through that fib confluence and then boom, and then reversing. But the 106.40, I think, will be formidable resistance for today. So let's go ahead and write that down. All right, 106.40 resistance 1.0640. We are obviously still in a very bearish. We still have a very bearish trend. Hey, the euro, by the way, is trying to get back above 106. It is at 106 right now. You notice, God, I got to point this out. You notice how we're at 106. The pound's struggling. The Swissie's not pulling back. Most of this is euro related. Euro pound's making a little bit of recovery. Okay. Anyway. Okay, going back to this. Okay, where is support going to be today? So you have to imagine. Okay, you have to imagine. There's probably some traders stuck on the short side down here. So any dip, well, I mean, we're not really too far off of those lows. You think about any dollar buying that comes through the market. If it's some pretty strong dollar buying, we could very easily end up back down here at 105.55 pretty easily. Okay, the lows from yesterday, 105.57, 105.58. I'm going to write down 105.60. That's not far. I mean, that's 40 pips away. It seems like sorry, typo. It seems like the euro has clawed its way back quite a bit, but it really hasn't. I mean, we're only 40 pips away from this, the lows from yesterday. That's not very much. It really isn't in the grand scheme of things, right? Yeah, so anyway, if I was going to short the euro, like I'm already short, but you guys know my cost average is 106.16. But if I was going to trade it today, I would try to wait for a move up to here to be on the short side to 106.40. Or if you want to play it on the long side, you're like, well, yeah, I think it's buy the rumor, sell the news for the ECB on Thursday, so I think the euro is going to rally. If that's your attitude, fine. Probably playing it down here at the support is going to be a better option for you versus right here. I mean, you're stuck, I would say, in the middle of this, the middle of this wedge currently. So shorting it up here, being long over here, makes more sense from a risk-reward standpoint. Okay, all right, let's go over to the cable. Now the pound. So the pound yesterday. Let me go back to yesterday's candle. Okay, yesterday we created a. Here, let's remove that for a second. We created a false breakdown and a hammer. Okay, do you see that? I was in the ER yesterday and I was looking at that and I'm like, man, I was actually on my phone looking at that candle and I'm like, man, that's going to create a hammer. And here's the thing. A lot of you look at that hammer and you go, you look at that and say, if you're looking at the false breakdown and the candle from yesterday, that nice hammer bottom, that played out really well to the upside. But if you're looking at it right now saying, well, it's going to go higher at some point today because of that candle from yesterday. It already did. You have to imagine at some point today. Here, let me grab a different pen. At some point today, while I was sleeping, this candle, okay, was green, right? It's already played out as a bullish. You guys, the time to buy it was yesterday. Now, I'm not saying it can't go up now, but I mean, if you're going, oh man, we had a nice hammer, it's going up. After that, it's already played out today. So it's not obligated to play out any more than it already has. Does that make sense? It's because a lot of people say, well, we had a hammer. I'm assuming we're going to close positive today. I'm assuming if you bought it like if you bought the cable like right now, you're probably not going to get hurt too bad buying it, realistically. Okay. Um, but you know, hold on really quick. Give me a second. Um, I don't think you're going to get hurt buying the cable right at this moment. But like I said, if you're expecting a big move higher, it's already played out a really big move higher. We rallied to above 151. All right, so now question is, where are we going to find support? So looking at this chart, I'm assuming support's going to be right back down here around these lows, which would be around maybe 150 and a quarter, because there's probably traders that are stuck on the short side that want to get out. So any dip getting close to 150, you're probably going to find some buying, and I would assume it's going to be down here. I guess the 618 is probably going to do the trick. So if you want to buy the cable, if you're like, well, Blake, I think that this downside dip is going to be an opportunity to be on the long side, well, maybe you might want to do that down here at 150.40, which was the 618, right? 150.44, 45. I'll write that down. It's minor support. It's not great support, but 150.45. Okay, that'll be some minor support. Obviously, resistance is going to be the overnight high, and the overnight high is currently 151 and a quarter. Okay, 1.5125. We are still in a bearish trend. Okay, we are still in a bearish trend with the cable. I mean, you might say, well, what do you mean, Blake? Well, we're still trending lower, right? We're trending lower. We're breaking lower. This is a big. We've looked at that potential of a big flag pattern. And frankly, I still see the bigger fib levels don't even come into play until you're well below 149. So there's still some I still think that there's some distance to travel there. Okay. All right. Let's go over to the Swissy. Did I get both support and resistance? I did. Okay, let's go over to the Swissy. Now the Swissy, the pullbacks have been very minor. Okay, we are in this upward sloping channel. Okay, now you notice where the channel support is going to come into play. Okay, right there. Let's just extend out that line. Right, looks something like this. You have to imagine that this right here is a buy zone. So 102.20 to 102.40 is a buy zone. The dips are being gobbled up really quickly. Any dip that you see in the Swissy, there's buyers. Okay, so as long as we're above like this 102.20, I don't think you should be on the short side. Now I'm going to write down 1.0220 1.0240. Okay, I think that those are all good levels of support. Now remember, the reason why we write down 10240, you have to go back to the, you know, the day before the Swiss National Bank removed the floor. We went as high as 10239. Okay, so we're now broken above that, and that's why there's dippers. They're there. They're adamant. They're aggressive. Okay, the dips to 10250 are being bought. 10257 is the low. You can't even stay down there for more than a half an hour, and then buyers come swooping in. Right, you can see here. I mean, we try to dip down to support, and then buyers just come supporting the market. So I think any move to 10220, 10240, you've got to look to be buyers. Now, this could very easily happen. I could see this happening this morning, pressing through the support here from the lows, trying to stop out some intraday traders, and then buyers come, swooping right back in. Remember, this channel is really strong, all right? Resistance, obviously resistance is going to be 103 and a quarter, and if things get really cooking, we're going up to 103.50. But I would assume that for today, we're capped at 103 and a quarter. There's probably not a big chance we're getting above there, even with a strong ISM this morning. 1.0325. Okay. By the way, for ISM today, that's obviously it's not the real important data of the week here for the U.S., but this is manufacturing ISM. We've seen some dips close to 50 in ISM, and we're expecting a tick back up to 50 and a half, 50.5. But as long as we stay above 50, I don't think the market's going to mind too much. So anything, even if it's even below expectations of 50.5, as long as it remains above 50, the dips in the dollar will probably remain really shallow. Okay, because the game changer for the Fed on the 13th would really be a weak jobs report on Friday. Okay, not so much the ISM. I don't think the ISM is going to move the needle too much today. Okay. Let's go over to the yen. So, like I said, I was reading Morgan's research report yesterday, and they're targeting 115, and on the yen, which I'm not short the dollar yen anymore, but we have a mess of chart. I mean, I could obviously delete everything here. I don't really want to, because this is all very significant. Currently, I'm going to remove some of these fibs and some of these lines, and I think we can remove that for now. I think we can remove a lot of this stuff, but I think we have to keep, no, I want to keep that. Okay, here, let's get rid of this too. We don't need these right now. Okay, we have this trend line rejection, which still could lead, at some point, we still could rally. You have to think about what's going on this week. We could very easily rally up to 124 and still be contained by this trend line. Okay, you can see that here. So even if we rally up to 124, it's possible. Now, what I'll be in here, we can remove this too. Okay. What I think we have to pay attention to regarding the dollar yen is more the broader range that we're in, which happens to be right now between 123.60 and the low end, which would be 122.25 that we marked down last week as support, which held. So I can't see the reason why I would want to trade the dollar yen while we're in this range. I think I'd be willing to short it towards 124 And if you want to be a buyer, buying it down at 122 and a quarter makes sense. But trading it right now just doesn't make a whole lot of sense to me. So support 122.25, resistance is at 123.60, and we are in a range. And I think you have to treat it as a range rather than getting sucked into it like right now, you know, right at this moment. Okay. Let's go over to the Canadian. All right, so we got Canadian GDP today. Market is expecting 0.1% on monthly Canadian GDP. Now, we have the BOC tomorrow as well, which is, you know, going to be more important than today's GDP reading. But the Canadian is starting to show some signs of weakness. We can see it cracking, okay, which means the Canadian strength is here. But the problem, or is trying to show up. The problem is that crude oil is so weak. Okay, crude oil is so weak, and it's just, I mean, it's holding above 40, but barely. I mean, I think barely is a good way to describe, you know, what crude oil is doing. So with Canadian GDP, as long as we don't slip into negative territory, I don't think we're going to disrupt this too much. But what I would do here, especially ahead of the Bank of Canada, is probably look for some of the support to hold somewhere down here. And what I'll do is I'm going to take the last time we did a lower low, which would be right here, to the high. Okay, you can see the 38% retracement. It comes in at the support. Okay, we've already held it once, so that means it really needs to hold it again. That support comes in right here, 132.75. All right, and if we get, you know, if we get a rally in the U.S. dollar Canadian, I'm sure it's going to be capped ahead of the BOC. What we may be doing here, and this seems more like a realistic ahead of tomorrow. What may be happening right now is we may be forming some sort of triangle, which would make sense, you know, ahead of the Bank of Canada. That to me wouldn't surprise me at all. So we may be supported right where we're at, but you know, obviously the GDP is going to influence what happens here. But any dip down to 132.70, whatever the lows are here, that's 79, okay. Yeah, 132.80 should be decent support. 1.3280, okay. And Euro struggling at the 106. All right, going back to the Canadian. Resistance. I mean, we'll write this resistance right here, which is 133.90. I doubt we make it all the way back up there, but you know, you never know. On a real weak GDP read, it could be possible. 133.90, and we are still in a range. Okay, one of the things that obviously you guys know is the outperformance of the Aussie and the Kiwi right now, which we're going to discuss when we come back from break. The Kiwi and the Aussie have been doing much better. So we'll come back and talk about those when we get back. Don't go anywhere. When I come back, we will continue on with our analysis. We'll also do the peso, Swedish krona, Norwegian krona, all those. So thanks everybody for being here. Be right back. I'll be back in 5 minutes. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So we're going to continue on with the commodity currencies, and they have been outperforming quite well, actually. And I think a lot of that has to do with like the precious metals are finding pretty decent support. You know, you got the RBA in action last night, which, you know, is spurring a little bit of short covering. You got the Kiwi dollar that technically, you know, we've been highlighting how it's getting pretty oversold, and we're setting up a big inverted head and shoulder pattern. But, like I warned you a little bit earlier, I think the, the, the pair is so obvious. It's such an obvious setup that when things are really, um, things are really, uh, uh, things are setting up the way they are like this. I don't know if it seems too obvious. When it's obvious like that, I tend to be a little weary. Now, the short term inverted head and shoulder pattern that you see here, that one I think is doable. It's the longer term one that has me a little concerned. A couple reasons. First of all, you have the extension here, and like I said, it almost seems a little too obvious. But there's also something to note. When you're talking longer term, we're still in between really big fibs. Even with the breakdown, we're in between some big fib levels. You can see here, all right? Which means we're just kind of contained, where we're currently at. And like I said, I think it's just very, very obvious. I don't know if the commodity route is necessarily over. I do think in the near term, though, we can push up to 67.50. I don't think that's going to be too big of an issue. What I would do, though, personally, is not be a buyer at current levels. You want, now that we're breaking higher, you want to be a buyer at the breakout point if you can get it. Okay, unless you missed it. I mean, you might have got it last night, bought it above 66 cents or right around 66 cents, and that's fine. You got to be skeptical because the dollar does look strong, especially against the euro, the Swissy, even the cable. The dollar looks really strong. So if you want to play the dollar to the short side, you have to be cognizant of the weakness that, the strength the dollar has against other currencies, not just commodity currencies. Again, one way to play it, in my opinion, is maybe like shorting the euro New Zealand, maybe the pound New Zealand on the short side, pound Aussie on the short side. That's one way you can play this commodity strength if you're not comfortable shorting the dollar, which it makes sense. All right, so anyway, let's figure out where all the stall points are. So like for today, you take this high, that's the trend line high, if you will, to the low, and we stalled at the 50% retracement. Okay, so that means that obviously today's high is a big deal, but if we can breach that, and let's just assume that we do, 67.15, which 67.17 is a 618. So 67.15 would be the next viable stopping point for the Kiwi. 67.15, and then if you guys want to buy the Kiwi, I think buying it at 66 cents is the way to go, personally. Okay, like if I wanted to play the Kiwi to the long side, which I don't really, but if I did, I'd do it like this. I'd buy a dip like that if I could get it to the breakout point. Make sure it can retest the breakout point, hold it, give you the confidence to be on the long side down here. All right, that would be my 2 cents. All right. And then obviously, if you want to be on the short side of the Kiwi, you probably wait till we try to complete this inverted head and shoulder pattern. And this is rough too. This could actually be more like a move to 68 cents. That's just what we had here. Okay. It could actually end up extending a little bit further. Okay. But I do believe we're still in a range, although we are seeing some short-term bullish momentum. Let's go over to the Aussie. Now, the Aussie is a little tricky. Let's go out to the daily chart really quick. So we had what looked like to be a false breakout, right, of this downsloping trend line. You can see that one right here, right? Downsloping trend line looked to be a false breakout. We dipped, but thankfully to yesterday's dollar weakness, we got an engulfing, pretty much an engulfing, pattern, bullish engulfing pattern, led us to the move higher. Okay, now we are testing 73 cents. Now 73 cents was resistance. We wrote that down because it was horizontal resistance. It is also the 786 retracement. Okay, that is resistance for today. Now we're almost up there, spike high 73.06. So I'm going to write down 73.05. But if we break that 305, let's just go with the running assumption that we break it, then the next move is up to 73.80. 73.80. We are in a range. We're trying to turn, and support now. Probably do something like this. So any dip down to 72.50 is going to find some buyers. Okay? And if you want to buy the Aussie, I think that's the better place to do it rather than buying it right here. You want to buy a dip down to 72.50 and then go on the long side. Okay? Okay, let's take a look at the dollar index. As you know, you guys know from yesterday, we rejected at the channel resistance. Worked out perfectly. Right, struggled at 100.30 is what we wrote down. Rolled over, came down to support. We briefly broke that. We wrote down the support yesterday at 99.90, right? If I'm not mistaken. And so we hit 99.90, broke through it in Europe, just trying to trip some stops below there and pop right back up. So what that did, let's see here. God, it gave us a little false breakdown, didn't it? All sorts of accounts too. That's interesting. See how we did a false breakdown here. We did a false breakdown horizontally. We did a false breakdown vertically. So what I guess what we'll do is we're going to mark these lows as significant lows for today. 99.80, and that resistance is back at, just have to imagine it's back at highs at 100.30, but 99.80 and then 100.30, and we are in a bullish trend. But that doesn't mean, just because we're in a bullish trend, that does not mean we cannot do this for the next couple of days. It is very possible that we do this, bounce at support, so keep that in mind. All right. Okay, let's go over to the peso, see what the peso is doing, because the peso, I believe, is sitting on support, isn't it, from yesterday? Let's take a real quick look. It is. Okay, big trendline support in play like right now. We're basically sitting on it. Take that spike low over there. All these lows, we're basically on support right now with the peso. So let's go to low, to high. 1651 is the 618. See these long wicks right here? 1650 as support. Okay. Let's write down. Trying to think about how far we could go, how far that we could dip to still keep it bullish or still keep above this trend line. I mean, I have to assume that this support is just really critical for bulls. I just don't know if we're going to make it all the way down there today. Yeah, George, I hear Obama holding some sort of press conference. Oh, he's in Paris. Okay. Yeah, it's not moving anything. I don't think there's much to do with the peso right now. I mean, the one thing you could do is think about being on the long side down here, maybe just below 1650. For those of you that are trading it, but one of the things that moves the peso higher, the dollar peso higher, is risk aversion, and right now we just don't have any. So we don't know what that is. The U.S. dollar Norwegian krona is just consolidating in above its breakout point. Still is, still holding up there. U.S. dollar Swedish krona still inside of its its really tight range here, right at the upper end of its range too. This is one of those currencies. Same with the Norwegian krona. If the dollar starts to rally, if the dollar starts to post a significant rally, these will break out. They have not sold off at all. So they're going to be in rally mode. I just don't. I don't see today a significant dollar rally coming. I don't think the ISM is going to be strong enough to push the dollar into a rally, and I think that the market will be hesitant pushing the dollar too much ahead of the ECB and ahead of the non-farm payroll. So anyway, if I was going to play the U.S. dollar Swedish krona, buying dips down to 860 seems like more of a logical trade. And what is this? I don't know why that's there, but I'm going to remove it. Okay. All right, guys. So here's your bias chart. It is done, and let me take some questions. Going back in earlier questions, Andy writes in.